Hello, everyone. I'm just going to check you can hear me. So if anyone can kind of feedback. Here we go. Yes, you can hear me. The more astute of you will have noticed that I'm only joined by one person, and we're a little bit late because we're having trouble connecting one of our speakers, but in the spirit of the show must go on, Eloise Grief, hi Eloise, is going to kick off with me, and we'll hope that Quinn Marquith from eToro can be patched through and join us very shortly. So thank you very much for joining us. You will see there is a chat bar in the right-hand column for me where you can post your questions. I can't promise I'm going to get to all of the questions, but I will do my best. It gives us a bit of a sense of what you want us to cover. You will also see there is a polls section, and that would really help me to gauge who we're talking to out there, your experience with crypto. So you'll see there's a wee bar chart. If you click on that, there's a couple of polls. So if you wouldn't mind kind of responding to those 3 polls, that gives us a sense of the audience and who is in the room. So Eloise, turning to yourself, perhaps by way of introduction, you could tell us your journey. You know, how did you get to be on a webinar with someone like me, sitting here on Tuesday evening talking about crypto, Eloise?
Yeah, hi Holly, thanks for hosting me. I think like many of our people who are joining us today, I was a lost seeker of trying to find where is best to invest my money, and made my way eventually to eToro, which is the platform which I finally ended up on, and started a portfolio there, which I kind of tweaked along the way and just came up with a strategy that has been very successful over the last 5 years. And eToro has the wonderful opportunity of letting people copy trade you, as they call it. So essentially, my entire portfolio is transparent, and people can then choose to copy all of my positions. Going forward, the platform will just naturally mirror that. And so I currently have 20,000 copiers on the eToro platform, copying me with just over 40 million US dollars, and I've specifically included crypto in my portfolio as a diversification tool. So hopefully I can share some light on that today. And particularly I felt comfortable with it because I should probably introduce my background as well. I'm a machine learning researcher at the University of Oxford. So very early on, I felt a very strong understanding of cryptocurrencies, and particularly blockchain, which cryptocurrencies use, and saw strong potential for their future.
Thanks, Eloise. So you're coming at this very much from a sort of data perspective, aren't you? There's a sort of lot of technical analysis I'm feeding this, which I'm interested to hear in. So Eloise, perhaps you sort of slightly join the short straw here, because Quinn was going to take this question, but as he's struggling to get in, I can see from the polls, 63% of people on the webinar at the moment don't invest in crypto at all. So we're starting, I have a very sort of small amount. I have to say it's smaller this afternoon than it was this morning. Eloise, what is cryptocurrency? Let's start with perhaps the hardest or the most easy question you're going to get today.
Yeah, so I think if I have to explain cryptocurrency in one sentence, I'd say that it's really units of data, each with its own value, which are being stored on a specific software known as blockchain. And one of the most obvious applications, of course, that we've seen of cryptocurrency is as a currency, as an exchange for goods and services. But more specifically, I think recently the focus has moved to blockchain, which is, as I said, the platform which runs us on. And that's really just a transaction ledger which maintains identical copies across each member in the entire network, each computer in the network. So yeah, in short, that would be my 2-sentence summary of cryptocurrencies.
And a question sort of coming in from one of our listeners, but what gives the unit its value?
Well, exactly the same thing which gives fiat currency the value. What gives anything the value is really the market decides what the value is. And I think what is sometimes a bit more difficult for us to understand with cryptocurrency specifically is that because of the way we transact as humans, we like to see something physical. We like to see something in the physical world, whereas cryptocurrencies, I think people often describe it as, a chain of letters and numbers, which is somewhere, I don't know where it is. It can be something very abstract.
We can still hear you, Eloise. Oh, and look, we have undoubtedly a very hot and bothered feeling Quinn, through no fault of his own, has managed to come in. It all worked perfectly during the rehearsal. So Quinn, apologies for that stressful introduction. I hope the next 50 minutes will be a breeze in comparison. Quinn, would you like to, as you gather breath, we've just done some intros, and I asked Eloise by way of introduction how it was, what sort of turn of fate in her life had meant she'd ended up on a webinar at 6 o'clock tonight talking to me about crypto. So Quinn, please draw breath. My apologies, you struggled to get in. Not your fault at all, our fault. How did you come to get interested and involved with crypto, Quinn?
Absolutely, thank you. Yeah, no worries on that. It's good to be here. So my journey in crypto, it started back in 2016 when I was in school studying a master's in economics before eventually working as an economist. I slowly started to invest more and more, particularly in the likes of Ethereum and Bitcoin. And that really started the journey there, is just by having some skin in the game, owning a little bit of cryptocurrency myself. It really drove me to understand it the more I failed as an investor initially, like most do when they first enter the space. Well, not necessarily most, but many. And from there, as an economist, I specialized in South American economies like Venezuela, Argentina, Colombia, and some of the most inflation-stricken economies in the world. And that really drove home to me over time the power of Bitcoin and blockchain technology to help not only individuals, but also sovereign nations potentially one day overcome the issues that come with inflationary spending, which really is the norm across the world, not just in South America. And so it was in that realization where I grew more convicted in my investment thesis to hold mainly Ethereum and Bitcoin long term, and to hopefully make some money along the way.
So you haven't gone for an easy, smooth, calm ride in your life, have you? You sort of looked at Latin American economies and ended up in crypto. A question sort of, Quinn, and there's questions coming on. I know we'll get into the detail in just one second. There are obviously many cryptocurrencies out there. From when we talked before, you tend to focus mostly on Bitcoin, but could you explain to us, or just give us an overview of the different types of cryptocurrency that are out there? And if we're thinking about risk and worried about risk, which I know many of our readers are, is one less risky than the other, or how do you differentiate between them as an investor?
Yeah, sure. So in my mind, I like to differentiate the crypto assets by I think from an investor's standpoint, most importantly, I think about adoption and network effects that are already taking root or taking off, you could say, in the case of Bitcoin and Ethereum. And that's why I tend to focus mostly on those two. Not only are they the largest by market capitalization, their networks are in a very real sense the largest. They've grown naturally, organically for the most part. And with Bitcoin, it's technically the most secure network on Earth for that reason, because there are so many nodes and miners securing the network. And with Ethereum,
forgive me. What's a node?
So nodes are any computers partaking in the network. That's any holders. If you hold Bitcoin and you access your wallet from a computer, you're effectively a node and you're part of that Bitcoin network.
Excellent. I'm a node. I never knew that. Thanks, Quinn. Eloise, when it comes to sort of crypto, tell us about how does it sit in your broader portfolio? So do you trade crypto as a standalone thing? Is it part of your bigger portfolio? And how much of your portfolio, if it is a sort of more diversified portfolio, do you have in crypto?
Yeah, so the introduction of crypto into my portfolio is really just a diversification tool. So the amount of exposure to crypto in my Toro portfolio specifically fluctuates between it's currently at 5%, it's been up to 20%. So it kind of fluctuates on what's happening in the crypto market at any given time and what's happening in the conventional market. And one of the reasons it's a really powerful tool, and I've introduced it into my portfolio, is that it gives a really good risk adjusted return. And so conventionally, it's really been uncorrelated to the S&P 500, which means that if the S&P goes up, cryptos go down and vice versa. Conventionally, this has been the case, which means that despite the high volatility, you can get a really good risk-adjusted return for cryptos. And so for me, that makes it a worthwhile part of my portfolio, albeit very limited to some extent.
There's a question sort of, I guess, for both of you that's come in. I mean, a very open-ended, difficult question to answer. What's the future of crypto? I guess that's what we're all here trying to work out. Eloise, when you look at the data signals out there and you do your technical analysis, what do you think the future is? Let's be specific of Bitcoin, for example, and perhaps if we can focus more on you answering that question from a valuation point of view. And then Quinn, perhaps same question for you. What's the future of crypto, perhaps more generally, how it will fit into our society?
Yeah, certainly we can look at Bitcoin. So I think there are kind of two applications or multiple limitless applications really for Bitcoin going forward. But if we just focus on its potential as a kind of cryptocurrency, then if we look at the price around the end of 2019, the price was around 7,200 for Bitcoin, which means at the time it had penetrated about less than 0.5% of the market. So if we assume that the total addressable market for Bitcoin is worth, it's estimated to be around $212 trillion. So if we just use that historical data and then say that we of course have multiple different scenarios going forward, but if we just take one fairly conservative scenario and say that if Bitcoin does penetrate that entire addressable market and reaches just 10% of the entire market, then its non-discounted utility price would be nearly $400,000 US. So at the future price prediction, that really means that Bitcoin has about an increase of 4,000% by 2030, it's expected. And as I said, that's only one kind of scenario. It depends on multiple different aspects of the uptake. And we've seen it perhaps to some extent fail or succeed as a currency. And maybe Quinn can talk a bit more widely about that.
4,000% by 2030. That's some gain. Quinn, the future of cryptocurrencies. I am, by the way, being widely told off for referring to them as currencies in the chat bar. So perhaps you can do two things. You can sort of say, well, this is why maybe they aren't currencies, Holly, stop it. And what is the future of these things, which I'm not allowed to call cryptocurrencies?
Yeah, sounds good. So I think I'll try to address the the two key main crypto assets, to put it that way, Bitcoin and Ethereum. So with Bitcoin, I see a bit of a range in when it reaches its full maturation of what it could mean to our world. At the lower end of the range, and this would honestly be a success in many investors' eyes if it only competed with gold. That would put it at roughly $10 trillion market cap. That would be roughly 10-15x from here. I believe in that world, it could function much the same way that gold functions for the individual as a means of storing your wealth, hedging against inflation, and politically for governments, it could serve as a base upon which to gauge the non-crypto assets, or perhaps the digital central bank digital currencies could be somehow disciplined, if you will, by Bitcoin in the same way that gold has historically up until about 40 years ago. On the higher end, Bitcoin as a store of value could also end up eventually on in a more bullish scenario, end up competing with the likes of government bonds, which are typically seen as also a safe haven or a store of value. And I know it's difficult to conceive of Bitcoin as a bond-like asset, but I really just mean in the sense that it can serve as a safe haven and a very generalistic safe haven. And in that case, it could be, the global bond market is massive, right? So Bitcoin doesn't discriminate against where you are in the world. So it could really sort of envelop or at least compete with the whole entire global bond market. And many analysts out there, some of the more bullish ones, point to that scenario. With Ethereum, it can be differentiated a bit from Bitcoin, actually quite a bit, because as a network, it's really catered towards smart contracts, i.e. utility. So what I mean by smart contracts is there are actually, a good way to think of it is about roughly 90% or more of the developers in the crypto asset space right now are building on Ethereum. That's just how well the Ethereum network caters to developers and developing things that you can actually use. So I use the Ethereum network on a day-to-day basis, really. As a crypto investor, I use the likes of Uniswap, which is a decentralized exchange. I can use that exchange to exchange goods without a middleman. And so this is just one of dozens and dozens of decentralized applications, they're called, that you can use if you own some Ethereum and you wish to partake in the Ethereum network. So I've heard Ethereum also be likened to a global supercomputer or a global app store. Ethereum Ether, the currency, is sort of your ticket to participate in that global app store. So when I use Uniswap, I'm doing just that. And so the use cases for the future of Ethereum in that regard are pretty much limitless. Just about everything that can be done, at least financially, we know, with the middleman is proving to be able to be done without a middleman, which is pretty exciting.
It's exciting, but it's also quite scary. I mean, we're getting a lot of sort of questions and sort of comments coming in from people a few people there are saying, well, I lost the keys to my wallet, or where is this sort of thing? It is in the ether, isn't it? And it's a shock for me. It's startling to hear you compare it to government bonds, because they arguably have a social purpose and they feel sort of safe. And so how do you guys, do you feel nervous at all that you both have considerable amounts of money invested in something which is just a string of letters and numbers?
So,
Eloise, let me heebie-jeebies at all about having, because you have the skin in the game, don't you? You invest as the people who follow you invest. Does holding Bitcoin, I think it is Bitcoin that you hold, does that give you the heebie-jeebies more than any of the stocks or shares that you own, to use a technical term?
I think it's, well, yes and no. And I would say mostly no, partly because, like Gwyn was talking, I understand a lot of the underlying blockchain. And so I think it goes well beyond just the currency. So Quinn was talking about smart contracts in the financial setting and how he's using it on an exchange platform. But I think we all tend to think that it's a choice to participate in this digital economy or not. But I think that's no longer the case. Whether you realize it or not, you may already be participating in this digital economy, because I mean, another use case of smart contracts is simply automated alternative to traditional contract law. So this could be for the case of exchanging property, or keeping track of real estate ownership and titles. So there are a lot of practical applications. It's already been used in a lot of supply chain applications. I mean, the apple you had for lunch today probably has a supply chain on a blockchain ledger, which are already being used. And so then to participate on this digital economy, you need to have the Ether or the Bitcoin to pay for those transactions to participate in that. So in that sense, I don't feel a lot of worry about it at all. And I even think about it as, whenever you're investing in something new, in a new technology, it has an important application for the digital economy in the future. And so even though it's very much in its innovation stage, or the innovator stage, and its early stages of adoption, this isn't the first time that it's happening. This happened, if we think about the dot-com bubble 2 decades ago, except now we're not buying new companies, we're actually buying a new asset. And even though at the same time back then, a lot of companies failed, similarly with Bitcoin, Ethereum, this new asset class, essentially, there will be a lot of failures. A lot of coins will not make it. A lot of use cases will not make it. But for me, essentially, I think significant strides toward adulthood has already happened. And so I think the trend is essentially irreversible at this point.
And Quinn, just if I can come to you, I mean, crypto, Bitcoin, they're unregulated, which of course is a sort of point of concern sort of for many people. I mean, what does that mean in practice for investors? Because the FCA, the regulator, has come out very recently and said a sort of fairly blanket statement that they think anyone who invests in cryptocurrencies should be prepared to lose all of their money. What would your response be to that?
Yeah, so I think it's fair to give warning to anyone who wants to invest in the space, simply because it is so volatile, and simply because so many people don't go into it with the right mentality, and so you can very easily lose money if you don't have a plan, and if you react emotionally to the movements of the market. But I would stress that I think it's important to really understand the market in and of itself, and what causes the wild price fluctuations. I think if people really contextualized it and understood what's causing these vast swings in price, they would be a little less concerned, because at the end of the day, the asset class is so young and so much money is flowing into it so quickly that it's impossible for an ecosystem like this to develop in any sort of organic way, which is exactly is a big part of what makes it valuable, is that it is being developed organically by the choice of individuals, rather than from some sort of top-down decree. You're going to get these wild swings because it's still an untouched free market to a certain extent. So you get massive profit. Those who are in massive profit take those profits, and so you do get these very, very turbulent market cycles that seem quite brutal.
They do seem brutal, Quinn. I mean, are you saying then? I think I'm right in understanding you, that you're saying that the swings in prices happen because these are not sort of large state institutions behaving in a sort of arguably logical way. These are sort of smaller retail investors
I think it's
profits, reacting to a tweet from Elon Musk, whatever it might be.
well, yeah, I think it's both. It's both institutions and individuals who are acting emotionally because they're making such massive profits so quickly, and so it's inevitable that when you get these bubbling up in the prices of these assets, which really tell you very little bit about the value, the real underlying value of the assets in the short term. This scares a lot of people, and it can make people wonder, what's the point? How is this going to be usable if the price is fluctuating so much? But what people forget is that there are certain people in the world who don't just view it. They don't have the privilege of viewing it as a speculative asset to make profit with. They're actually relying on it to survive. Those in Venezuela and Argentina who are adopting the technology by their own free will out of necessity. And so when you start to think about it that way, yes, some people will inevitably get into the market at a poor time, but that doesn't mean that you're not free to try to enter the market at perhaps a better time, take advantage of it like many people have. But with any market, some people are going to win, some people are going to lose. Some people need to get their hands burnt before they learn lessons and understand how to play the market a bit smarter. But that's part of what makes it beautiful too. There is no central bank to bail you out in the crypto market right now. Perhaps one day, I would expect that when an asset like Bitcoin, for example, reaches full maturity, it would be so liquid. And by that I mean there would be so much money in the asset that it would take a lot more to move the market, just like the global bond market today. And so eventually, in my mind, I see the market going to a place where it's not this Wild West roller coaster that we all know it to be right now.
And a question that came up in the chat bar, and I've got no idea, actually, it's never occurred to me to sort of think this. When people buy, say, Bitcoin on eToro, where does the money go? What goes on there, Quinn, behind the scenes?
Yeah, so if you buy a crypto asset on an exchange like eToro, the money is being the asset itself is being held in cold storage. It's being held in your name because you're not purchasing it as a CFD, you're purchasing the underlying asset. So you don't have the keys to your own individual wallet when you buy crypto on an exchange. However, it is your property by law. But as we said, because it's so nascent, the industry is so young, there aren't these sort of regulatory protections, at least here in the UK, that give investors a bit more peace of mind. But that said, the nature of cold storage when an institution holds something like Bitcoin in cold storage for you, it is stored in ultimately the most secure possible way that any asset can be secured. So you still get the benefit of that extra security.
Forgive me, Quinn. I've asked a dummy question. I'm now coming back with a second dummy question. Cold storage. I don't really understand. Could you be more Mickey Mouse with it?
Sure.
About if I buy £500 worth of Bitcoin on eToro, what happens to that £500? What do you do?
Yeah, so by cold storage, when you own Bitcoin, right? So you have a public key and a private key. So you have the public address that someone else would use to send Bitcoin to your wallet, and then you have the private keys. The private keys, if you're storing a Bitcoin in cold storage, the private keys are held offline, so a hacker couldn't get to those private keys to then take Bitcoin out of that wallet. So that's what I mean by cold storage. Is it's not hot, it's not connected to the internet in a direct way at a given time. It's you insert the key when you want to, and that key is held offline, sometimes in the form of a physical asset, but I can't speak to the exact form that the key is used by eToro, of course, because I'm not in that department.
Okay. Eloise, turning to you, I was really interested when you talked about using Bitcoin to diversify, and you were sort of saying it's not correlated to the S&P 500, which makes sense, but it's not often I've heard people talk about including Bitcoin in their portfolios to minimize risk. I'd just be interested in sort of hearing a little bit more from you as you're sort of building your portfolio and working out the asset allocation. I'd just be interested to hear a bit more from you on sort of how you're using Bitcoin to offer better risk-adjusted returns. Could you just talk us through that a bit?
Yeah, so even though, let's use Bitcoin for an example, even though, as we've heard many times today, and I think I'm seeing in the chat, a lot of people are aware that it's a highly volatile asset. And so even though it has been a high risk investment, its returns have been, on average in the past, over the last 5 to 10 years, have been higher than almost any other asset. So when we look at risks, for example, Bitcoin's Sharpe ratio, which is one of the measures to look at historic risk adjusted return. So it doesn't just predict the future, it looks at the historic return. It looks at the kind of risk tolerance. You use it to kind of look at the risk tolerance when you're choosing an investment. And so Bitcoin's Sharpe ratio is higher than that of the US stocks. So that indicates to us that Bitcoin as an investment tends to yield really high returns relative to its risk. So just to give you an example, if we talk about the market, the S&P 500 specifically, in the last, I think, 60 months before just going into December 2020, we had 17 out of 16 months where the market declined. In converse, the price of Bitcoin rallied for 7 months in that same period. So, for example, in the 5 years leading up to the end of 2020, if a portfolio, for example, invested 10% of its holdings into Bitcoin and 90% into the S&P 500, it would have generated a compound annual return of 26.8%. So that's really why the risk-adjusted return for cryptos make it a worthwhile part of a well-diversified portfolio, in my opinion.
And then Quinn, coming back and sort of picking up on your comments, you've talked about sort of Bitcoin in the same breath as sort of talking about government bonds. What's your time frame, do you think, on this, with your belief about the future trajectory for crypto assets?
Sure.
Picking on Bitcoin, I guess, but specifically. What time frames do you think we're looking at, in your opinion?
Sure. Yeah. So in answering this question, I want to be careful not to sound like a fear monger, but I don't exactly see the direction that bonds have been going historically in the most favorable light. I don't want to sound like a doomsdayer, but it's hard to envision a future where the price of bonds can continue to be going up in the way that they have, without the inflationary sort of spiral that we're in just speeding up, if you will. And so, I mean, there's all sorts of ways that it could go. Sometimes, I think one way to think about it is when you're in an inflationary spiral, which I've seen occur historically in Latin America really ferociously. It can happen slowly over the course of decades and then happen all at once, where there's the need for a change in the monetary regime is one way to put it, where the old monetary system that you've been running needs a breaking point in order for, in most instances, historically over the 20th, 21st century, the can is just simply kicked down the road. You start a new currency that's fundamentally the same, but at least you get a fresh slate. With Bitcoin, perhaps it could play a role in some kind of transition. It looks like some South American economies right now are taking more of an active approach to that. And it just so happens to be the economies that are most dependent on the US dollar, like El Salvador, for example, that are taking this active approach and perhaps trying to front run the process. And we'll see if it works out for them. So far, they seem to be eager, and all of those countries that are pushing most ardently for it, Paraguay included. They do share in common that dependency on the US dollar, which is a foreign currency, which comes with a lot of drawbacks for their economy. But yeah, with developed countries like the United States, like Great Britain, it's a bit more difficult for me to imagine how something like this could play out. It doesn't necessarily, the situation doesn't need to be that the entire economy is solely based on Bitcoin. Bitcoin could naturally play a role by way of free market forces because people will need it, but it doesn't mean that it's the sole currency, some kind of blanket standard that is all people use. It can simply play a role, and a big one at that, and then it could exist alongside another form of currency, and you'll still have these traditional sort of bonds that I think humans naturally desire and will create. But Bitcoin, I could see it just playing sort of a disciplinary role, like I spoke about gold historically disciplining governments, creating a standard that they have to adhere to, where they can't just print money out of thin air.
I'm sort of looking, we're getting quite a lot of questions coming in about some practicalities, like how one goes about buying it, trading, etc. We'll come to those in a second. I suppose I'd just like to put the flip point of view, because obviously, and that's why we asked you guys on, you're both quite pro crypto assets. You've talked about decentralization, there's a sort of utopian dream of that. But on the other hand, there is a shady underbelly to cryptocurrency, and one could say that a small few stand to make a lot of money, and some people say by exploiting the sort of naive many. There's also environmental issues. We've heard a lot about that. I know you've got some sort of views on that, Quinn. I mean, if I could sum up my question as saying, isn't the world of crypto just a little bit dodgy?
Well, I mean, it depends, because it's a difficult subject, because the media, I think, really likes to take any advantage they can to create something to write about and take an angle on it that sounds controversial. I'm not saying that all the criticisms on crypto assets are completely baseless, but I mean, one statistic I would point to is the fact that by my research, I've learned that roughly 96% of all people who engage in crypto asset exchanges, who develop on Ethereum, for example, who are starting blockchain startups on different chains, are legitimate, are out there in the open, pay taxes, and are law-abiding citizens. Bitcoin is one of the most it's the most transparent sort of monetary network in existence right now. It's actually incredibly easy for authorities to trace it and to track down Bitcoins that were used in criminal activity. That said, there are privacy coins like Monero that would be far more suitable for a criminal, if the criminal wanted to use that sort of thing. So I do think that the idea that the crypto space as a whole is more shady than the likes of, say, Cash, which can be anonymous. And I don't mean to rip on Cash. I like Cash, not because I'm a criminal, but because I think that putting Bitcoin next to Cash, which is this opaque, untraceable, largely medium, is pretty eye-opening.
But we don't mine Cash, I guess, and we don't burn a lot of energy in doing that. What about the environmental questions that have been raised about crypto?
For me or Eloise?
I think for you, I've got a question. Okay. I'm coming to Eloise.
Yeah, no problem. So on the environmental question, I do have strong opinions on that, because I think in the media it's been pretty misrepresented. A lot of this, these fear articles that have been written over the past year and have gained more prominence, particularly with the likes of Elon Musk, etc. They stem from an article that was written in 2017 by, I believe it was an institution associated with climate change. They used a lot of faulty assumptions when writing and analyzing Bitcoin. One would have been that Bitcoin miners, that their technology wouldn't improve over time. They disregarded the fact that most of Bitcoin mining is done through renewable energy. It's pretty ironic because that's especially the case amongst Chinese miners who use hydroelectric power mainly. And the economics of Bitcoin mining really do incentivize sustainable energy, because that helps the profit margins of miners. Energy expenditure is really the key and pretty much the sole expenditure that miners have. It's their key cost. And so it's in their favor to use cheap renewable energy to mine Bitcoin. And I think it's no accident that estimates upwards of 60-70% of mining is done through renewables. And over time, I just see the incentives lined up to encourage that development. And so I think I would just encourage anyone to try to really read both sides of the argument out there. I think that the negative view out there, you can trace most of those arguments to that one article that I'm talking about that was written in 2017. But the name of the institution is not coming to mind, but maybe it's best I don't.
Okay, we can look that up and send it out in the notes after this. Some questions coming up, Eloise, if I can turn to you, on sort of people saying, well, Bitcoin or Ethereum, discuss. Rather than sort of me put any opinion on it, what does the data tell you, Eloise?
So even though we use the blanket term cryptocurrency for them both, I think they both have very different attributes, and they are starting to play a different role in terms of their potential going forward. As Gwyn has already said, and we focused a lot on Bitcoin today, which is kind of compared to the new digital gold. I'd say the most important comparison between the two is that Bitcoin has a fixed amount in circulation, whereas Ethereum has an unlimited amount. So already when you're starting from that point of view, you have two very kind of different potential applications that you are looking at in terms of the two classes. And then also, like, Ethereum has the benefit of hindsight, which Bitcoin did not have. Bitcoin was the first cryptocurrency, and so Ethereum has had the opportunity to learn a lot from the limitations of Bitcoin. For instance, the biggest critique against it is the time of each transaction. And so Ethereum has really kind of placed itself in a position where it's able to overcome a lot of these kind of shortcomings of Bitcoin. I think the largest consensus in the market for people who are sticking to these two, let's call them, I think that they're kind of the two main ones, and probably a lot of people go for a 50-50 split between the two because they have different potential applications and they have different kind of future trajectories.
I'm going to push you a wee bit more on that, Eloise, because 52% of people on this webinar don't have crypto today. And I imagine in my stroke of genius that they're on this webinar because they're interested in potentially putting a toe into the water. I'd be interested in views from both of you on what you would say to a friend of yours, who'd never invested in crypto before, had a portfolio of more mainstream assets, was considering it. What would you say to them if they were actually saying, I really would like your counsel on how I go about thinking about this or starting it? What percentage of my portfolio should I be looking at? I know it depends on their risk profile, etc. Bitcoin or Ethereum, how do I buy it? Help, how do I go about this? So Eloise, back to you. If someone were looking at this to diversify a mainstream portfolio, they were looking for capital growth, looking at the data signals, what would you say to them?
It's really, crypto is really the kind of high risk, high reward part of your portfolio. So the first thing I would say to them, of course, like you've already pointed out, is that you need to have all your other things in order. You need to have all your other basics right. You need to have done your budgeting, your savings, and all the boring bits before you even come near crypto, because like we've also said today, any money you put in crypto, you should be willing to lose all of it. So if you view it as kind of that part of your portfolio, which is really, really high risk, then the next thing, I guess, would just be to have some introspection about your risk tolerance. Do you want to dive directly into buying the cryptos, or do you want to buy a mutual fund where you have exposure to a bunch of different cryptos? I mean, I, for instance, currently, as I mentioned, hold between up to 20%, but mostly no more than 10% in my Toro portfolio of cryptos. And it's largely split 50-50 between Bitcoin and Ethereum, although it's slightly more favored towards Ethereum because, as I mentioned, I think the blockchain has a lot more potential for other applications, whereas Bitcoin is just a store of value. So that would be kind of my high level. But yeah, as you said, it's really difficult to say an exact percentage without knowing somebody's exact portfolio.
Questions come in, Quinn, which I think is quite interesting, on thoughts on investing as an alternative approach to this in the blockchain and that broader technology rather than looking to crypto assets themselves. What's your view on that? And I guess, also if you could, in answering it, just share with us how en masse eToro customers are approaching what we're talking about today. Are they buying cryptos? Are they looking for blockchain sort of assets? What's going on with your customer base when they're dealing with this asset class?
Yeah, so it ranges from customer to customer. Some customers come to the platform with a specific asset, maybe just one in mind, because they have high convictions about the future promises of that asset, and so they decide to take a speculative punt on a crypto asset that perhaps isn't as proven as Bitcoin and Ethereum insofar as their adoption, the size of the network, the market capitalization, and some clients vary a whole lot in their risk tolerance. So, but generally, as a company, we always advocate diversification. So if someone wanted to get exposure to the crypto asset space and wanted to be diversified within the space, I would say, try to think about network effects. Try to think about Bitcoin, Ethereum, and how much adoption they've already achieved. And when you want to go beyond that, if you want to take calculated risks beyond that, we're not financial advisors as account managers, but it's up to each individual to gauge how much they're willing to risk. Because I know it sounds silly sort of differentiating the risk profile between crypto assets, but once you look at the numbers, when you look at the size of Bitcoin, its market capitalization, you compare it to some of these assets that we do provide on the platform. It's exponentially smaller pools of money, exponentially less liquid. And so the prices of these assets can move a whole lot more to the upside and the downside. So I just urge caution and to do everyone to do their own research. And if you're convinced one way or another, that's up to each individual.
Question coming in, I don't know the answer to this. Are there examples of index funds that offer exposure to a mixture of crypto assets? Is that something you see on your platform, or are people buying the asset itself individually?
Yeah, most clients, it seems there's a good mix, really. I mean, so we do have some bundles of cryptos that you can purchase in the form of what we call a copy portfolio. Some cater towards the big caps like Bitcoin, Ethereum, Litecoin, etc. Some of those in the top 10, the biggest ones. Some get a bit more nuanced and include some DeFi tokens and NFT tokens. I think that what kind of gets at your question, if someone was to think about building sort of more of a diversified crypto portfolio, I would think in terms of use cases and niche. So Bitcoin, everyone understands the use case there, store value. Ethereum, we went over that use case, global supercomputer, potentially in the making. And then you have the NFT space, which is all about connecting a unique identifier on chain to either some digital asset or a real asset in the world. You have decentralized finance, most of those tokens. So you can distinguish tokens from the likes of Bitcoin, which, like Uniswap, an asset we offer on the platform. Decentralized finance is a niche in of itself, right? So these technologies aim to replace banks in banks' various functions. So I would just advocate maybe studying all the different types of niches and perhaps deciding how much exposure you want to each, if any.
Thank you for that. Just looking at the time, we're coming up to time. If anyone's got any burning questions we haven't covered, feel free to shoot them through. Questions, sort of, Quinn, just a practical point of view, someone asking if you can buy crypto assets in an ISA.
So from what I understand, the answer to that is no, as of now. But yeah, I would imagine that as adoption and regulation naturally take hold over time, that something like that perhaps could be made possible in the future, I would hope. It's hard to imagine if this asset class continues to grow over the next decade. It's hard to imagine these sort of things not being developed.
A final question then, Eloise, if we can sort of turn to you, perhaps a more broad and general question, because we have lots of people I know on the webinar who have more mainstream in inverted commas portfolios. It's been a hell of an 18 months to try and work out what the future might hold. If we can sort of expand this out as you look across crypto, but also more traditional mainstream investments, what signals are you seeing, Eloise, and what do you think? I know crystal balls are hard, but from the technical analysis point of view, will you tell us what we're in for over the next 6 to 12 months?
Wouldn't it be great if I had a crystal ball, isn't it, Holly? I think one important thing, if we look at the kind of traditional markets, is that we have to be very sober about what the first half of this year has already looked like, particularly the performance of the stock market. I think at the closing half of the first year, we were at 12%. So already in the first half of the year, the stock market has delivered kind of above average returns for an entire year. And then if we kind of continue on this trajectory for a double-digit end to the year, that would be, I think, it's our third consecutive green year of the stock market then, and that would be the third time in the last 50 years that we've seen that. I'm still pretty bullish on the second half of this year. I'm thinking we'll get away with some of the kind of stimulus packages ending only early next year, although we definitely won't see the growth rate that we've seen so far, and definitely a lot more volatility in the second half of the year. I mean, this year has just been so unusual so far. The usual seasonality that we see has not been there. So it's just been a year that's not been for the record books. So I'll just say strap in for a lot of volatility, but I am still bullish for the rest of the year.
You're bullish. That gives me hope. And Quinn, I guess just a sort of final word. It's interesting. What are you seeing if you look at your customer base on eToro? Are you seeing more trading than you do in response to the sort of volatility? What en masse are your customers doing? Buying, selling, sort of which assets are sort of showing particular sort of backing or growth? So if you look at your customer base as a whole, which particular sectors or markets is there interest in, and is trading very high at the moment, or have people sort of pulled back a little?
Do you mean crypto assets and non-crypto?
Yeah, across the board. I'm particularly interested as well, I guess, in sort of crypto. Do you see trading? I imagine it must be sort of quite correlated to volatility and spikes in the assets.
Yeah, well, with crypto in particular, I think that, like myself, many people regard it as almost too volatile. Obviously, if you're a skilled trader, and there are many skilled traders on eToro who have the guts to try to take advantage of that volatility, because if you're a skilled trader, you can absolutely do so. But I think in my experience, at least as an account manager, and I think some of the stats would bear this out, what's more popular strategy tends to just be buying and holding, at least with the bulk of my clients that I engage with. And typically that's tends to have a bit of a higher success rate when it comes to returns over time. But because, yeah, I mean, the more volatile an asset, it tends to be more difficult to remain profitable as well.
Well, thank you.
In short-term trading, I mean, of course.
Short-term trading. We are coming up to our time today, and I don't want to keep people. I am actually planning or contemplating going and sitting in the kids' paddling pool now with a glass of wine, sort of contemplating whether I should add more crypto to my portfolio or not. But Quinn, I'm sorry we gave you such a stressful time joining us, but thank you so much for your comments today, and Eloise, ditto. Thank you. It's been really insightful to talk to both of you. We will be sending out a follow-up note, so there's a few sort of links and things we've mentioned in the webinar. We'll include those in there, and you can watch this back on demand. So a final thank you to eToro, our sponsors. And I should just say, I think we've covered it, but just in case anyone's in doubt, I always feel sort of honor bound to say, please remember crypto is unregulated and the regulator is clear that this is a very high risk investment. But hopefully that's come out loud and clear today. Please send us any feedback, sort of comments. You can email me at holly@boringmoney.co.uk. I'm always interested to hear feedback, what we can do better and what you thought. But I hope you enjoyed that and learned something from it. Eloise, Quinn, it's been brilliant. Thank you so much for joining us. Over and out. Thank you.
Thanks, Holly. Bye.
Thank you, guys. Thank you.